9:36 a.m., $500,000 gone in 4 minutes, $1.1 million still on the line. Your hands are on the keyboard. The screen is red. Every second you don't move, it gets worse. This is the moment. Not the Ferrari, not the bonus, not the handshake in the elevator after a good quarter. This is what it actually feels like. 12 minutes ago, you had everything figured out. But let's go back further. To 5:47 a.m., your alarm didn't wake you. You were already awake. You've been staring at the ceiling for 40 minutes, running numbers that don't exist yet. This happens before every big position. Your body knows before your mind admits it. Today is different. You get up, you don't eat. Coffee first, always. The apartment is dark except for the monitor glow. You sit down in the same chair you sat in for 6 years, and you open the same dashboard you've opened 10,000 times, and for a moment, everything is quiet. This is the part nobody sees. Not the trading floor noise, not the shouting. Before all of that, this. A person alone in a dark apartment at 5:47 a.m. with a cold cup of coffee and a position that's about to either make or ruin their year. You've done the research. 3 weeks of it. Every earnings report, every analyst note, every footnote that everyone else skipped. You found something. A discrepancy between what the company was reporting and what their supply chain data suggested. The market hadn't priced it in yet. It would. Today, at 9:45 a.m. when the numbers dropped, you went long $2.3 million. Your own money, not the firm's. Personal. At 7:15 a.m. your colleague calls. He's heard a rumor. Another fund is taking the opposite position. Short, heavy, someone who knows something you don't. You sure about this? He asks. You say yes without hesitating. You hang up and stare at the screen. For the first time this morning, a small cold thing moves through your chest. Not doubt exactly, something quieter than doubt. The question underneath the certainty. You ignore it. That was the first mistake. You just don't know it yet. 9:30 a.m. Markets open. First 4 minutes. Up 1.2%. Noise. Don't celebrate noise. You know better. Then at 9:34 a.m., a tweet appears. Not from the company, from a journalist. 4 words. Sources say, restatement coming. Restatement. That word means the numbers were wrong. It means the company is about to tell the world that everything they reported needs to be recalculated. Your thesis was right. The direction was wrong. You're long. The stock is about to fall. 90 seconds. That's what you have before the market processes what that tweet means. Here's what 90 seconds feels like when $2.3 million is on the line. It doesn't feel like 90 seconds. It feels like every decision you've ever made compressed into a single moment that won't wait for you to be ready. You sell. Not everything. Half. The other half you hold. Because the restatement might be minor. Because you've been right before when everyone else was running. Because certainty doesn't let go easily. At 9:36 a.m., the stock drops 8.4%. $500,000 gone in 4 minutes and 17 seconds. You don't panic. Panic is what kills traders. Not bad positions. Panic. The decision you make in the 30 seconds after a loss like this determines everything that comes next. You look at the data, not the loss. The data, the restatement is minor. Exactly what you modeled. The journalist oversold it. The market overreacted. This corrects itself within the hour, if your read is right. You have $1.1 million left in the position. You buy back the half you sold, at the bottom. Your hands are completely steady. This is the part they never show you. The way professional risk feels different from amateur risk. Not excitement, not fear. Clarity. At 10:14 a.m., the stock begins to recover. Slowly at first, 1%. Then another. You watch without moving. This is the discipline, not the buying and selling, but the watching, knowing when to let something breathe. At 10:31 a.m., you're back to flat. 6 hours of work, 3 weeks of research, and you're exactly where you started. Most people would feel relief. You feel nothing yet. Relief is for after. At 10:47 a.m., you're up $340,000. Your phone lights up. 3 messages from the desk. People have noticed. You don't respond? At 11:03 a.m., you're up $780,000. This is the feeling. This specific moment, not the number, but what the number means. That the read was right, that the 3 weeks mattered, that the 5:47 a.m. and the cold coffee and the quiet apartment and the small cold thing in your chest that you ignored, all of it was the price of this moment. You allow yourself one thought. This is why. You don't smile. You watch. At 11:22 a.m., a second headline drops. The restatement was not minor. The sources were wrong about the sources. The actual number is 3 times larger than reported. The stock doesn't fall 8%. In 11 minutes, you lose $1.1 million. You sit very still. The screen doesn't care. The numbers don't care. The market opened this morning the same way it always does, completely indifferent to how certain you were when you walked in. This is the moment nobody talks about, not the loss. The moment after the loss, when the number is real and permanent, and the only thing left to decide is what kind of person you are right now. Some people close the laptop. Some people call someone. Some people do the thing that ends careers. They chase it. New position, immediately, emotionally, trying to win back in the same session what the session just took. You've watched it happen. You know exactly how that story ends. Not with a recovery, with a second loss on top of the first, made worse by desperation, made permanent by pride. You open your trading journal. 6 years of entries, every position, every thesis, every outcome written in the same handwriting, on the same pages. You type 4 lines, November 14th, net, minus $487,000. Thesis was correct. Execution was split. Did not chase. You close the laptop. You stand up. You walk to the window. Outside the city is completely indifferent. Taxis. People. A food cart on the corner. Someone down there is buying a $4 coffee with no idea that 4 floors above them, a person just lost nearly $500,000 before noon and is standing very quietly at a window, not devastated, not broken, just thinking. You watch a man on the street below check his phone, frown at something, put it back in his pocket, keep walking. Whatever it was, a message, a number, a piece of news, he absorbed it and kept moving. That's it, you think. That's the whole thing. You remember something your first mentor told you 6 years ago on a day that felt like this. 1. You wrote it down. You forgot it. You are only understanding it now, standing at this window with red numbers behind you and a city below you that has no idea and no interest. The market doesn't punish being wrong. It punishes being certain. Being wrong is recoverable. You recalibrate. You adjust. You come back tomorrow with better information and a cleaner thesis. Certainty is different. Certainty closes the door to the information that would change your mind. It turns a position into an identity. And when the market moves against an identity, you don't cut the loss. You defend it. The $487,000 wasn't taken by a bad trade. It was taken by the feeling at 5:47 a.m. that you already knew how the day would end. By the yes you said without hesitating when your colleague asked if you were sure. By the small cold thing in your chest that you felt and ignored because certainty felt better. You go back to the desk. You open the journal. You add one more line. The certainty cost more than the position. Tomorrow is another 5:47 a.m. You'll be awake before the alarm. The question is whether you'll remember what it cost you today, or whether the next position will feel so certain that you forget all over again. Most do. Every trader remembers their first big loss. Most remember it wrong. They remember the position, the stock, the number. The ones who last remember something else entirely? Drop a comment. What do you think they remember?